Good morning, good afternoon, good evening, wherever you're in the world. Welcome to this 91st episode of the Pre-Market Show. We have NFP. Let me say that again. We have non-farm payrolls, aka NFP, in less than 5 minutes. I'm going to bring on James DeGrassi and DeGaris from Macro Markets Capital, and I'm also going to bring on Andrew. We have an exciting show for you today. We may be able to do some live trading. We're probably going to be able to answer some of your questions, and we're also giving away a $5,000 account to one lucky winner. So without further ado, let's get over to the show. Remember to smash the like button and feel free to post your comments in the live chat. Let's get over to the show. All right, let's bring in Andrew and let's bring in James. How you guys doing today? How's everything going, guys?
Need to unmute myself. So we came back into the swing of things. But yeah, it's been a real interesting week in the markets, and we'll cover some more of that later. But I know James is here to run through a few things for us. So over to you, James.
Thank you very much. Thank you, Mandela, for the intro as well. I'm just going to run through and do a quick NFP preview. We're about 7 minutes out or so, and then I'll run the analyst stream so everyone can hear the data when it comes out. But just before I run through NFP, we did just get some interesting comments from Feds Waller, who is obviously a voter of the FOMC, and he normally votes dovish, meaning he wants interest rates lower. But he's saying that we're going to see a spike in gasoline prices, obviously because of the tensions in the Middle East. But it's unlikely for them to cause sustained inflation. He was just speaking on Bloomsbury TV. But I think the real kind of takeaway from his comments was that next week we've got the PCE data, which is the Fed's preferred inflation metric. And he's saying that's going to come in hot, and it's going to come in higher than what was expected. And he reiterated that a couple of times. So he's saying if we get that higher PCE data next week and a solid jobs report today, it could signal that the Fed should wait at their next meeting, obviously this month in March. But on to NFP preview kind of as quick as I can. Obviously it's the main highlight of the session today, although I'm not too sure how this NFP data today is going to matter kind of too much for the market, given obviously the focus being on the US and Iran war and obviously the surge that we've seen in energy prices. But nonetheless, stronger data could trigger some further hawkish repricing, as Feds Waller mentioned, and that he might change his mind on the labour market if we get another good report. Remembering he's saying that any good jobs data could keep the Fed holding rates where they are, but he's someone that normally votes for the Fed to cut rates. The jobs data we've got up until now has been positive and has been suggesting a stabilisation in the labour market after the weakness that we saw last year. The expectations seem a little skewed to the downside, but I can't see no real reason why, and I'm going to go through the distribution of forecasts in a moment. But there's been clear improvement across many data points, and the US economy has been re-accelerating since the start of the year and not slowing down further. Obviously, for anyone in the group, there's the full kind of preview. And as we know, we have the NFP data, and that steals the headlines. The jobs report is expected to show 59,000 jobs added to the US economy in the month, down from 130k in January, but slightly above the 50k break-even estimate. But the main focus will be on the unemployment rate. So although NFP steals the headlines, the Fed care more about the unemployment rate, and that's expected to remain unchanged at 4.3%. And obviously this data will be used to gauge the Fed rate cut expectations. But some people in the FOMC, including Waller, will use it to decide whether to vote for a rate cut or hold at the next meeting in March. But the Fed are expected to keep rates on hold, barring any drastic change in the current situation or outlook. I won't obviously read the full summary as we're a little bit tighter for time, but as I have mentioned, it will be interesting to see what the market reaction is to this today. Normally it'd be obviously one of the biggest kind of focus points of the month, but at the moment, maybe not because of the tensions in the Middle East. Now, the distribution of forecasts, obviously we have our data points where we've got 4.3% is expected for the unemployment rate, and we've got about 59,000 as the consensus for the NFP data. Essentially, how they get this kind of expected data is they survey all economists and investment banks. They all give their answers on what that may be. And as you can see here, it can range from minus 9,000 all the way up to 125,000. But most of that kind of estimates and most of their guesses are range between 40 to 75,000, but they get all of these answers and work out the average, and that's how you get your expected data. Now, the distribution of forecasts is important because it kind of shows you what the second majority would be, and it shows you the range of estimates. So for NFP, like I just mentioned, we've got a range of minus 9,000 up to 125,000, so a massive range. A lot of that is clustered in that kind of middle section, about 40 to 75K, but obviously the expected data is 59,000 jobs added. For the unemployment rate, 58% of people voted through the survey that it'd be 4.3%, but the second majority is skewed to the upside a little bit, and I'm going to break down what that means in a second. But it's essentially saying the second majority, 36% of people, think that unemployment rate could be a little bit higher than what's expected. The focus is going to be mainly on the unemployment rate. Like I said, NFP steals the headlines, but we can see that the expectations for the unemployment rate are skewed to the upside. So if we got a 4.2% print, which was lower than what's expected, we could see quite a hawkish surprise and quite a strong dollar. Fed's Waller mentioned that he might change his mind on rate cuts if the strong January data is repeated in February, with this data that we're going to get in a couple of minutes' time. The February jobs data so far has all been positive. The employment index in the ISM manufacturing PMI improved. The one in the ISM services PMI jumped up a little bit as well versus the prior data. And the initial jobless claims during the survey week were 208K. Continuing claims were 1,822K, which was the lowest since September 2024. And lastly, the private NFP, which is the ADP, beat expectations, coming in at 63K versus 50K expected in the 22K prior. So all of the jobs data so far this for February has been decent. As we know, the kind of focus and what steals the headlines will be the NFP data, obviously expected at 59,000. Anything above that will be good for the dollar, especially if we get an unemployment rate data that's higher than 4.3%, so 4.4% as an example. Obviously, on the flip side, if we get jobs data, NFP data that's lower than the 59,000 expected, and we get a 4.2% unemployment rate, we could see quite a hawkish surprise and quite a strong dollar. So we're seconds out, really. I'm going to turn the analyst stream on full volume, so when we do get the data, should be able to hear it as soon as it comes out, and I'll shout out kind of what the data is for NFP and the unemployment rate as quickly as I can. I'll pull this across over here quickly, and I'll make this full screen as well. And this is a 15-minute time frame on the pound dollar, euro dollar, and dollar yen to be able to kind of see market reactions. But I think we're about 25 seconds out. Imagine most people will be looking at the dollar on this bit of data. Obviously, as we know, economic data affects the interest rate kind of repricing for, obviously in this case, the Fed, and that interest rate repricing will affect the dollar most. I think focusing on the dollar will be better than focusing on gold and the S&P and stuff. About 5 seconds out. Minus 92,000. Minus 92,000. Massive miss, and it's 4.4% on the unemployment rate. Wow.
That's bad. That's big. That's huge.
Very, very bad. Very bad for the dollar.
Yeah, dollar's lower. Gold's catching a bid, though. Gold's up a bit.
It will off that.
Yeah, just
Wow.
seen the MES as well take a dive, and I was on a 45-minute chart as well. So yeah, not good news, but great summary, James, in just under 10 minutes. Yeah, thanks for that. Yeah, it was great. And let's see how this maps out now.
Pull that analyst stream down now. Obviously heard the data, but wow, massive miss. Obviously minus 92,000 jobs created. So they didn't create any jobs, they lost jobs. That's versus the 59,000 expected, and the unemployment rate higher as well. Obviously shocking jobs numbers, and I'm sure Fed Waller will be going back on his comments now, saying that he'd potentially think about holding rates in March, and I'm sure he'll be voting to cut rates in March. And I expect the interest rate expectations for a Fed rate cut. Obviously, it's not going to happen in March. That probably still won't prompt a March cut, but it should kind of confirm a June cut and maybe even push some traders into obviously pricing in 2 interest rate cuts this year as opposed to the one that the Fed thinks they will do. But obviously it throws a spanner into the works, because all week with the surge in energy prices, obviously that pushes energy prices up and oil prices up, it pushes inflation up. And the kind of surge in energy prices this week has thrown a few murmurs around that maybe the Fed wouldn't cut rates at all this year. And then obviously you get some shocking jobs numbers like that. And they're really in a kind of battle now. You know, that stagflation battle is back on between what could be higher inflation and lower employment. But that's pretty much all from me. Just wanted to give everyone a preview into that, and I'd expect the dollar to probably be, you know, weak off the back of that for the rest of the afternoon. But obviously I think all focus on a Friday now, although that's thrown a massive spanner in the works. We'll definitely kind of turn back to the geopolitical tensions in the Middle East and gold and obviously oil and energy prices as well. But I'm surprised, shocking numbers, really shocking numbers.
Yeah, I think the market's still digesting what actually happened, and I'm really grateful, James, that you kind of set it out in a way that's easy to understand, and you set us up very well for this Friday. And let's see, it's all to play for in the next, I guess, 6 hours of the day. Let's see how markets react to this shocking data. Let's see.
Yeah,
it's gonna be a good day.
Thanks, James. Yeah, we got some good comments in the chat coming through. So, James, how can people, get in contact with you, on your socials? If you want to drop them
obviously just through like Macro Markets Group. Obviously our company, I think a few maybe will be in the community and stuff, or you can find us on Instagram and stuff like that. Obviously we're hosting a big event on Saturday the 2nd of May. Mandela will be presenting about psychology. He'll be interviewing Andrew as well, which I'm really looking forward to. He'll be going over some of his best day trading strategies, and the founder of City Traders Imperium, Daniel, will be there presenting on the day as well and speaking a little bit about his experience and obviously his journey from kind of starting out in financial markets to founding a prop firm. He'll be revealing hopefully a few kind of stats and statistics about how to be the most successful trader you can, obviously with prop firms and with CTI, and he'll be interviewing some paid out CTI traders as well. So people can obviously contact me through Macro Markets Group, and hopefully some of these viewers, that tune into you guys every week and know yourself, Andrew, and know yourself, Mandela. Hopefully they want to come and meet you and connect with you and listen to you at the event in May as well. But obviously, thank you very much for having me on this afternoon, and hopefully that's helped a few people just kind of navigate and digest that NFP data, which I think surprised a lot of people, including not just us traders, but members of the FOMC. It's just called Fed Waller out. He's made comments less than an hour ago about a potentially strong jobs report, and they haven't created any jobs. They've lost 92,000, so a big surprise on that. But thanks for having me, chaps. I'm looking forward to staying tuned until 2 p.m. for your pre-market show.
Excellent.
Thank you very much. Thank you, James. Awesome. Fantastic. I think this is going to the story that AI is potentially going to reduce the amount of tasks that people have to do and maybe even impact some jobs. And this is one of the first signs that I think this AI story is impacting the labor force. All right, Andrew, how are you doing today?
Yeah, just to get back to the comment, it'll be interesting to see the reasons out of the US for the jobs loss. Surely not all AI, right? But I can imagine right now is a good time to be a tradesman, right? So
yes,
as
it is.
AI take over. So for myself, as that news come out, I actually hit to take profit on the on the 45-minute chart. So we'll share that later. But I think before we start, I think we do need to cover what's going on in the Middle East and how it's affected the markets. So I think it could be time for chatting charts.
Oh, I love it. I love the chatting charts. Can you say it one more time? Okay, go for it.
Chatting charts. Okay. Right. So let's start with. Should we start with gold? Because when this all kicked off on a Saturday, I could think, probably 99% of traders were going potentially at that time were going long, right? Safe money, yeah. There's uncertainty in the world. Dump your money in gold. But if we can just have a look at that, potentially on the open, and done the opposite, right?
Yes, this is a daily chart of gold. So it went down on Tuesday, and we're now sitting just above 5,100 spot gold.
So yeah, I can imagine a lot of people got caught out, and I do know a few traders that they couldn't wait for the market to open just to be go long on gold. So yeah, a little bit of a surprise there, and actually some of the money seemed to shift into Bitcoin, right? So we did see a good pump. It's actually I think it's about down 3% today, but we can go through my Bitcoin chart now, but I'm still in two minds if that 60k is the bottom. Like I said last week, once we break that 60k, I would be looking to go short down to 49. But it does seem to be holding, right? So we'll have a look into that now. And I can actually let me share my screen. So you've got Bitcoin there, right? And you're on
Bitcoin
the 4 hour. Yes, I can see. Yes, you've marked out the new range where we're at. And yeah, we did have a nice push up yesterday, and I can imagine if you're an ICT trader, right, you could probably see a liquidity void from all those long red candles going down, and potentially as that liquidity void being filled in, and now it's normal business resumed while we get a push to the downside. But for myself, not really too interested in Bitcoin, not until it starts, tickling that 60k level. And I would be looking at a short position. If we do fail to break 60k, if we get there, then potentially we could be looking at the bottom and looking to go long. What about yourself, Mandela? What are you thinking about Bitcoin?
Yeah, it's starting to show signs of life here. I like it here. I think we're going to have to stay above 70,000 for me to kind of get even more interested, especially anything more substantial in terms of like the size and the length of time that I want to hold it. But yeah, definitely good signs. Sort of yesterday hitting what would have been a decent level not seen since February, beginning of February, above 73,000, just about 74,000. So I want to see how Bitcoin reacts today after we've gotten the employment data shock, but definitely moving in the right direction as of today.
Yeah, so I suppose could cover a little bit on the global markets. So just some open source information, really. So it looks like Qatar Energy has issued here we go, a bit of French force majeure. Yes,
Force majeure,
basically that's a contractual clause, from the parties. Basically, they can come out of the contract, right, without any liability, and that's been happening from Qatar Energy, and that's been felt in Asia already, and we can see it continue to be volatile now. I think for the next few weeks, So yeah, keep an eye on Qatar Energy. That's definitely one I'll be watching. And secondly, then is shipping. So any of you into shipping futures, or any products actually. So the Strait of Hormuz now, that's being closed down, or it's definitely slow traffic through there. And people might be thinking, well, the U.S. Navy, the U.S. has destroyed most of the Iranian Navy, but the issue we got in the Strait of Hormuz is that it's got land either side, right? So just got to be aware of small attack vessels, like pirating, right? So there has been reports of that as well. So they have been launched from land, pretty hard to intercept. So yeah, keep your eye on the shipping lanes, because that's definitely going to have an impact on the markets as well.
I have a quick question for you, Andrew, on that. Do you have any sources or any platforms that you kind of would suggest any of our viewers sort of tracking these sorts of things? Not to put you on the spot, but I do know that you always have your fingers on the pulse. So if someone's watching this and they say, okay, well, how do I kind of keep an eye on the developments in an easier way? Any thoughts on that?
Yeah, so open source. So you got your news outlets, so you can go to them. But what I would do is don't rely on one news outlet. So like in the UK, for example, we'd rely on the BBC quite a lot. What I'd recommend is go to the Al Jazeera news channel, just to get some different perspectives on things, and different news sources, but by different of priority will have different stories, right? So yeah, I'd be looking at some of the mainstream media. I'd look at alternative sources, maybe news from the Gulf states. That would be a good place to start. And actually, X, you'd be quite surprised how quick data comes through on X as well. So X is a pretty good source as well for open source sourcing for sure.
Yeah, I just pulled up X here. There's a few different ways to look at data, but yeah, I agree. It's various sources, real time, and free, which is good. Yeah. So yeah, good call out.
So what's the official reaction to this data? Because
so it looks like I would say dollar down. This is Nasdaq down, S&P or ES down. Gold up slightly. That's the initial knee jerk, but as you know, these things can change on a dime, and we could be looking at something very different when we get the open. But
yes.
Yeah.
So for myself, as always, going to be looking to go short on the ES, probably got the 10-minute time frame as always, but just making some really good developments with the forex indicators. The issue is doing these scripts. Yeah, I can only do the scripts for TradingView. So I know a lot of prop firms, especially forex prop firms, they like to run MT4, MT5. So homework for the weekend, I'll be looking at like an MT5 bridge.
Okay.
Yeah, so going to look into that. But I just want to share the results because I'm pleasantly surprised. It's the best way to put it.
Yeah, pop it up.
So let's have a look.
Reminder to join the prize giveaway. The links are in the live chat. All right, Andrew, you can pop it up when you're ready. There we go.
Yeah, so let's have a quick look at this. I'm just going to look at my other screen, right? So this is on 45 minutes, showing on the MES, but we can take that over. That's why I was asking you earlier about the US 500, right? So
yes.
We can look at taking that over, but it's trending the trend lines, but it's actually using pivot points then for your take profits. It's trading 1-to-1. We can just see it at the moment. It's spitting out some really positive results, right? So with that news, so we've got a target here again. So 1, 2, 3, 4, 5, 6, and if we keep, there we are, 7. So if we, So this is, some of them working on still in development, and hopefully, we can get some alerts, and we can get this over then onto MT5. So I'm looking to that MT5 bridge, or we need to ask the guys over at CTI to start using TradingView, right? So yeah, it's really interesting at the moment. I just need to do, say, back testing for at least the last 12 months on it. I'll be happier then once I've got that sort of data. But yeah, it's swing trading. It's swing trading, the vertical breakouts. It's using 3 points of contacts on the trend line, and then it's looking to take the trend. So take the trade. So it's interesting, put it that way. So yeah, I'll be probably reaching out to Alex from Bermuda over the weekend, and between the two of us, we should be able to put some sort of script together and get this going.
No, it's great to see that the collaborations are happening, and Alex is a great trader. So can you keep us updated and let us know how things develop?
Yeah, we'll revisit next week, so we'll have another week's worth of data, right? So we're bound to hit a stop along the way for sure. And what we'll do then is I should have an update to where we're at with the script, and I'll also update the chat then on the MetaTrader bridge, so we can actually get TradingView to talk to MT5, and hopefully then you can just be using your TradingView, but actually taking the trades on your MetaTrader platform. So yeah, we'll look into that.
Yeah, excellent. I'm just watching. We're still getting a fairly good move here. You said you were short earlier. S&P 500. I
was short. Yeah, just now on the chart we shared. Yeah, just hit the take profit.
Yeah, it's still showing some weakness here. It's going to be a very interesting open in about 45 minutes time. So let's see. I do think today there is a 70% chance or 73% chance that we get a nice sort of trending day today. So yeah, just be careful. I know we still have some time for things to stabilize, but it's showing the reaction quite clearly at the moment.
Yes, it's just dropping like a stone, and that's on a 45-minute chart as well, right? Yeah. It's just one-way traffic. Yeah, just no fight at all. So yeah, be looking forward to the open. I'm sure, some people are going to try and jump in, and try and buy the pullbacks, right? So yeah, it'll be interesting. But for myself, as always on a Friday, I'm only looking to go short. That's what the data tells me. So that's what I do.
That's it, and that's the way to trade. You trade off the data. I know we've been trading together for quite a long time now, Andrew, and we keep it simple. We trade what the process tells us to do. We trade within our parameters, within our rules, and that's what keeps us profitable over the long term. So opening up the live chat to anybody who is live with us today. I know we have quite a few people joining us live. We do have quite a few comments from earlier today when we had James on. But just opening it up to anybody who does have any questions for us. Let us know. We have about 10 minutes left before we do the prize giveaway. And then, we'll get ready to start the live trading for today.
Yeah, so what's been happening with yourself? Much trading this week?
Yeah, it's been okay. So the week's been positive. We're green for the week. Haven't really traded as well as I usually do, or as well as I would like to. And I think that's in part because the moves out of the opening range, so that the strategy that we use is not optimum, or not the environment that we're having now is not ideal for the strategy. So I'm waiting for that time when things do, I want the trades to be easy out of the opening range, nice and easy.
Yeah, agreed. I haven't taken one trade this week. Just literally.
Okay, there you go.
Sat on my hand all week. And
that's good.
Yeah, potentially today as well, if that, the short opportunity doesn't set up, I won't be taking that. But one thing I did notice is drastically reduced my trading in February, and just as profitable in February as what I've been in the previous months. So you take in more quality trades.
Very nice, very nice. So less is better. The less you trade, the more.
It's quantity, so you maybe get 2 winners, a stop, a winner, 2 stop, and it was just like carnage, like over those like 20 trading days, right? Your equity chart is just up, down. It was like this, right? But what I found in February, being very disciplined, only taking the trades, following the direction that the data suggests, and a handful of trades, but just as profitable. Because obviously, I'm getting more winners and much less stop losses. So that's interesting for me, and I'm going to do exactly the same for March, and then we can review that as well at the end of March.
Good. That's good. Very good. The data is important as well. Staying on top and making sure that we're always learning from this process and we're always improving. So I find usually on Fridays, I used to trade horrendously. And that's where I adopted the capital preservation Friday from, to try and save my profits from Monday to Thursday, and this Friday is no different.
Yeah,
I think it's preservation first.
And I get that as well. If you've rallied up nicely Monday, Tuesday, Wednesday, well, just take the rest of the week off, right? Enjoy yourself, kick back and take it easy.
Yeah.
Why put yourself any under pressure, to lose any of your capital. So I agree with that. But with myself, trading the futures, it's more of a smash grab Friday. I'm not taking those longer trades right here in the futures market. We potentially be in and out in 10.
I remember we did do a poll in the live chat, and I remember more people liked the smash grab Fridays for themselves as well. So I think that's very telling. It's a very popular technique.
Yeah, I've gone from a smash and grab Friday now to just short Friday, and if that opportunity doesn't present itself, I'm just not going to take the trade. But I am very excited what I showed earlier on that 45-minute time frame, and just can't wait now to, over the weekend, just to get this script done. Just run it through the Pine editor. Let's see what faults chucks out. Let's try and get them done, and get onto that trading view to MT5 converter, whatever it's called. So a little bit of homework, and I can't wait. Really looking forward to that. So that's my weekend done. I'm just going to be looking into these scripts, and it's been a really quiet week for myself. Obviously, geopolitical events, they've sort of taken over my life since Saturday, but hopefully everything calms down a little bit. Well, as calm as can be. And we can get some trading done next week.
Yeah, I think next week's going to be interesting. So you've segued into a very interesting topic, which is the daylight savings. So for anybody who was not aware, starting on Sunday morning, the US and Bermuda's included in that group will spring forward. So anybody trading over here, where daylight savings has not kicked in yet, there will be a 4-hour difference between Eastern time and GMT. What does that mean? That means that New York markets will open at 1:30 London time for the next 3 weeks until the end of March. So our shows were going to be 1 hour earlier to compensate for that. So if you do trade the open, just remember to be ready 1 hour early for the next 3 weeks starting on Monday. So that should be good. I'll remind you as well, Andrew, because we're gonna have to jump on an hour early until March. I think we switch over March 29th.
Yeah, so I remember last year, I was just sitting on StreamYard and I was like,
it messes you up. It messes you up because you're used to having that time until 2:30, and then 2:30 becomes the norm, and then all of a sudden, you're like, wait, something's not right. Yeah. So I'll definitely have to send a reminder to everybody on Twitter, and it's usually only 2 weeks, which is not that bad. But this year it's going to be a little bit longer. So I think this is going to be an interesting month. We have the Federal Reserve interest rate decision. We have CPI. We have futures rollover. We have the end of the first quarter. We have OPEX. I think it's going to be a spicy month. Very spicy.
The S&P is just, it's finished. So I think it's a question in WhatsApp, potentially are we going to return to some of the lows, right?
Yeah.
And I think that question might be answered. So yes, I am not much more from me, because real quiet week in the trading world. So do you want to run the competition? And I'm going to
let's run it. Yeah, let's run it now. Let's see. I put the information late, so we have not as many entrants, but we'll still do it for the people that have joined. All right, thanks everybody for entering. And as you know, we will be doing a $5,000 account giveaway. Andrew, can you help me out with the drum roll, please? There we go.
Lots of entries today.
And the winner of the $5,000 account is Jackie. Congratulations, Jackie.
And Jackie's got a question in the chat. What is the minimum risk percentage for single trade in a Mandela 5K account?
What's the question?
What's a Mandela account? What's going on?
Let's go here.
What's the minimum risk percentage for a single trade? I think you might mean maximum risk, right? On a 5K account, what would be a maximum risk?
Yeah, that's a good question. Let me pull it up just so I'm giving the right details. What we could do, we can pull it up here. Let's go to City Traders Imperium, who is our sponsors. Let me go here. And that's a 5K account. 5K, there we go. So maximum drawdown is $250. Am I reading that right? This one. Yes.
Well, I think he's asking what's the minimum risk per trade, maybe.
Minimum risk per trade.
Yeah. So how much of your capital would you risk per trade?
Personally, not from the rules. So I like to go small. I would rather do it slow and steady. And yeah, so I would suggest doing like whatever size you think you should be doing, cut it in half. Because if I'm in a trade, I'd rather make money slowly than to try and make money quickly. So if I'm trading, for example, if I'm trading a $5,000 account, I would look at something like one lot or 0.5 of a lot, and then be willing to get a few of those if they're working. But less is more, like you were saying earlier. Yeah.
Yeah.
So that's how I look at it.
Just an article this week, and I'm just going to paraphrase it now, but the guy was just talking about when people get these funded accounts, especially the people who win them, they treat it like a lottery ticket, right? Treat it like a scratch card. They scratch in away, didn't win nothing, throw it in the bin, right? I think the whole point of the story was, try and treat these, funded accounts, especially the ones you win, and try and treat them like real money. And as Mandela said, slow and steady, and you will get passed, and you will get funded with CTI. And there is no shortcut to trading, right? It's because what will happen is if you pass the evaluation quick and easy, by a bit of luck, when you actually go live, you'll carry those bad habits, that bad luck forward with you. You're just going to blow your account. So as Mandela said, whatever number you're thinking of in your head, cut it in half.
Yeah, I think that's the way to do it. And it may seem like it's taking longer than you set for yourself, or it's taking longer than it should. But in many ways, that's the way to do it. Yeah. That's the right way to do it.
From personal experience, before getting funded with the futures firms, right? I buy an account, race through them, then buy some more, race through them. Then I'd get really close to getting live funded. Yeah, lose it, race through them. And what you'd find, you'd just be going through this cycle, not in weeks, it'd be a matter of months. You just go through the cycle, nearly there, fail, nearly there, fail. What you can do, slow and steady, and instead of losing all those accounts over, say 2 to 3 months, take your time for 2 to 3 months, you'll actually pass. So one, you get your life funded account, and number two, you're going to save yourself some money in the long term.
Yeah, I think that's the best advice. Absolutely, that's the best advice. So thank you very much for your question and congratulations on winning the $5,000 account, Jackie. As we spoke about at the top of the show, we have a market that is digesting this slew of data. It was very articulately laid out for us by James DeGaris of Macro Markets Group. I think the big surprise was that NFP number, which came in. We were expecting a $58,000 increase, and womp womp, we got 92K to the downside. So Andrew, I think I'm gonna buckle up my seatbelts for today and get ready for some trading action.
Okay, right. I gotta make a move, and yeah, nice to see you on YouTube.
Nice to see you as well. Nice to see you as well.
I'll drop your WhatsApp later. Right, thanks, chat, and I'll see you all soon. Bye for now.
Take care, Andrew. All right, everybody, that's it from us. And just a reminder to make sure to smash the like button. We do read all of your posts and all of your comments. Part of the reason why we have different traders on is because the feedback and the suggestions that you give us is so helpful in helping us to improve our show. So please take a moment to smash the like. And also thanks for watching. If you're watching us live or watching us on the replay, it really, really helps us to continue to do these, particularly on these big news days. It was a last minute decision from James to jump on. I forgot to send the link to James and to Andrew. So in the end, it all worked out perfectly. But we're really, really grateful to have you all watching our show today. Just a little bit of information. We are on show 91 and we're planning to do some big announcements for episode 100, which is in 9 episodes. If you're wondering, we've had 65 days in 2026. Which means that we have 300 days left to go in the rest of the year. So let's make each and every day count. In terms of trading days, we have about 207 trading days left if we just count the days when the markets are open. So that's plenty of time for us to grow our account. Whatever you do today, please make it special. Let's aim to have a positive day, everyone. And until next time, happy trading.